forward to it. We have a very special call here. And for those of you guys who are coming on, we know that there are people coming on for different reasons. I know we have some athletes that are on the line. We have some professionals as well, doctors, attorneys. Maybe it's a college student trying to figure out the next step. Maybe it's a busy mother, working 9 to 5, looking for an opportunity to supplement income and lower taxes. Whatever it may be, I hope that we have something here for everybody. And I think for those of you guys who don't know the person that's coming on, Sandy Botkin, you're definitely in for a big treat. Sandy's an expert, and I'll let him tell his story a little bit. But he'll be explaining to us about taxes and how to lower that. Now, for me and my journey, when I got started in this business, I really came in as an amateur, and I didn't have a lot of experience. I didn't know that there were different tax laws for people who own businesses. So it was definitely a shock to me, and maybe some of the information you guys hear is going to be a big shock to you guys. So I got started in this business about 6.5 years ago, and when I got involved in this, I looked at it just as a way to supplement my income, which it did, but at the same time now I'm learning that having a home-based business does have several advantages. Later on, after Sandy is done with his presentation and his info, you guys are going to be hearing from Jordan Kemper, which is a good friend of mine and a business partner, and this is a gentleman who's very interesting, so I'm excited to hear his part as well. This is the person who started his business at the age of 22, so very young to start a business, but definitely a home-based business as well. And he took a look at entrepreneurship and really serious to the point where he actually decided to not go to medical school. So that was a very, very big decision. So for people who are on the call thinking to themselves, well, I got a lot of things already lined up, I highly recommend that you guys take a close look at this information to see if it's something that resonates with you like it did for us. So for Jordan and myself, we've been doing this for a bit now, and Jordan, by age 24, was not just making, a couple of $1,000s a month. He was actually able to generate a residual 6-figure income. And once again, I'll let him tell his story a little bit more later on. But as for me, I'm excited. I'm going to be taking some notes on this. Once again, like I said, I've been doing this for almost 7 years now. I have generated a 7-figure income total in this business. And I'll be honest, with some of the things that Sandy's going to talk about, it's been a really good experience from an income perspective as well as from a tax benefit perspective. So, Sandy, I don't want to take too much more time. I think everyone's excited to hear you. So let's go ahead and turn it over to the man himself, Mr. Sandy Botkin. Sandy, you there?
Thank you. Yes, I am. I really appreciate that. I got to tell you how honored I am to be participating with USANA and presenting with One Body International, and it's really, really a great honor. But I'm also, I got to tell you, I also love and admire entrepreneurs. Heck, I am one. And I feel that anyone that has the guts and drive to start their own business deserves every advantage they can get. And I feel I can give them, a really big advantage by understanding and using some of the great tax laws to help fund your business. Now, this is a very content-oriented program, folks. This is sort of a 30,000-foot overview of what's in my books and videos and so on. So you might want to take some notes. You might want to get a paper and pen because I am really going to move, okay? So be aware of that. First thing I want to ask you, and I'm going to be asking you a number of questions. Has anybody ever had the experience of being overbilled for something that you purchased? And maybe you were billed for something you didn't even purchase. And let me ask you a question. The higher the amount, the more aggravating it becomes. Am I correct? Well, it happened to me. I was in Florence, Italy with my wife, and we came back. We got billed for the meal. It's about $120. The dollar didn't go that well there. And yet, not only did I get billed $120, but I was billed twice for the same exact meal, same restaurant. I was irate. I contacted that credit card company, and I demanded a refund. So my question is, how did this happen to you when it happened? How did you feel? Did you just let the overcharge go? Or did you demand the refund like I did? Because I want you to hold on to that feeling because I'm about to make it a lot worse. Now here's the next question. Do you want to just pay all the taxes that you legally owe, or do you want to pay a lot more? Now that sounds like a silly question, but what if you are business people, if you are overpaying your taxes by literally thousands of dollars a year? I'm not talking $100 like I did on my credit card, but thousands of dollars a year. Would you want to know about it? Do something about it? Of course you would. Over the next 50 minutes, I'm going to prove to you that you are in fact overpaying your taxes by literally thousands of dollars a year. You're going to find, by the way, this is not a motivational seminar. You're not going to get out of here and feel good. In fact, it's the reverse. You're actually going to feel bad for how much you overpay. But the good news, here's the good news. Don't worry, because I'm going to give you a very simple, easy solution to help you keep thousands of your own money every year for the rest of your life. You may be thinking, oh boy, what's this going to cost? Well, here's the total price in terms of time, effort, and money. The solution will require no more than 2 minutes a day, I promise. One finger's effort and cost zero out-of-pocket expenses. So you think that sounds fair? Let's get started. Now, I'm going to be saying a couple of very shocking things, certainly surprising, and I think shocking. So I want to give you an idea of who I am and why I'm qualified to teach you this. First of all, my name is Sandy Botkin. I'm a CPA. I am a tax attorney, and I'm a former trainer of IRS attorneys nationwide. So if you think of an IRS agent as a rat, I guess that makes me the head rodent. I've been lecturing for over a quarter of a century on tax reduction and financial matters. I'm a featured tax coach with Donald Trump as we did the Tony Robbins Wealth Seminars. I'm a best-selling author. If you go on Amazon.com or Barnes & Noble, you'll see a book called Lower Your Taxes Big Time, which was my #1 bestseller. And in addition, and I do recommend everyone get that book, it's called Lower Your Taxes Big Time. But I have another book that's garnering some terrific reviews. It's called, just came out too, it's called Achieve Financial Freedom Big Time. Achieve Financial Freedom Big Time. And I'm been a guest expert on Fox, CNN, CBS, and CNBC, and I'm not saying this to impress you. I just want you to know that I know what I'm talking about. And here's the first shocking thing. You're going to spend more on taxes than you spend on food, housing, transportation, and clothing combined. The next shocking thing. There was a study done by Harvard. They wanted to know what percentage of people at age 65 can retire with the same standard of living they had before retirement. The shocking, that question's not shocking, but the answer was 4%. 4% of everyone in North America can retire with the same standard of living they had before retirement at age 65. What about the other 96%? They have to continue working, live on some form of charity, or reduce their standard of living. Now, here's my point. If taxes are the #1 expense you pay in life, and I can get that down legally, if you can use that to help get out of debt, you think maybe that can improve your retirement chances? Absolutely. You know, I'm going to say something that's going to sound kind of funny, but the government, U.S. and Canada, are the second biggest bookies in North America because they are betting on you big time to be in business and succeed. Because the government knows one very important fact, and that is for little acorns come big trees. For example, Apple Computer. You think Apple Computer started with 200,000 employees? Of course not. It started out of Steve Wozniak's garage. Microsoft, think that started large? Nope. It started very small. So the government passes good tax laws because they want you to be in business. In fact, we actually have 2 tax systems in North America. And when I say that, most people think, oh, one for rich and one for poor. And that's not quite right. You're close. There's one to make you poor. And that's for everybody here who's an employee, because you are taxed on $1 and you don't really get that many deductions. But if you're self-employed, not only do you get everything that an employee gets, but you don't pay tax on your self-employed income until you get all your deductions. So basically, you get the drink before the government gets 1 drop. Plus, you can write off things like your spouse, your house, the equivalent of your kids' education and weddings. I'm not exaggerating when I say that. You can set up a pension plan that I promise you makes any government plan look small by comparison. The tax benefits for a business are enormous, so the government passes great tax laws for small business that will generate cash that you never have to pay back. And let me give you a little example. Joe is the following expenses. He happens to be an employee, or he's self-employed, he just doesn't know the rules, which results in the same thing. #1, cell phone. Now, a cell phone's deductible, you just got to know what you're doing. But as an employee, it's not deductible. He's paying rent on a home, which is not deductible for an employee. He spends money on car expense, gas, repairs, insurance, not deductible as employees. Restaurants, he eats out a lot, not deductible. Entertainment, he likes to have fun, go to have movies, golf, plays, hockey games, not deductible as an employee. Medical expense, in 2013, you have a higher threshold than it was in prior years under Obamacare and other expenses. But here's my point. By having a home-based business, now you're able to convert portions of what was totally non-deductible to now become deductible. You actually have a choice. You can convert some of that tax into deductible take the deductions that will reduce your tax. We call that redirected taxes. Think about this. Let's say you pay $10,000 a year in taxes as an employee. Wouldn't it be wiser if you could take a portion of those $10,000 by starting a home-based business and using that to fund your business? Wouldn't that be the wiser move? And that's why millions of Americans are actually starting home-based businesses today. Now, here's another question. Do any of you have a cash rebate card, or maybe get some points? What do you get? Points, mileage? Maybe you might get 1% cash back, 2% cash back. I think Capital One is 2%. How would you like a cash back card that gives you a minimum of 20 to 53% cash back on almost everything you buy and almost everything you do? Would you like that? Believe it or not, many of you already have that. It's called your business card. Because if you're in business, you get a huge cash back on all expenses that can be justified as a business expense. That's really what a deduction is. Now, a deduction isn't cash in and of itself. The way you figure out how much cash a deduction generates is you multiply it by your marginal tax bracket, which means what you pay on the last dollar you make to the federal government and state governments. So let's take an example. If you're in the 40% tax bracket between federal, state, and Social Security, or federal, provincial, and CPP in Canada, and you get a $1,000 deduction, that's a $400 cash back on that $1,000 deduction. If you get $10,000 worth of deductions in a year, in the 40% bracket, that's $4,000 of cash saved. Now, all of these cashback cards have rules. Some of them have, I've seen as many as 16 pages of rules. This one only has 3 rules, but they're important. The first rule, and the most important rule, is that you got to run your business like a business and not like a hobby. I can't emphasize how important that is. Many network marketing professionals don't really understand this, even those making a lot of money. So what is running it like a business? Number one, business people should have business plans showing 3 to 5 years of projected income and expenses, including marketing, what they expect to do. Hobbies do not. Business people go to training like this. You can never get enough training as far as the IRS is concerned. Hobbies do not. Business people work their business regularly. That means at least 1 hour a day, 4 to 5 days a week. Hobbies might work it once every 2 weeks for 12 hours or 10 hours. Business people, if they're not making money, what do? They meet with an expert like Jordan or Michael and find out what they need to do to turn their business around. And then they follow their advice. Hobbies do not. Business people always have an accountant. I recommend that strongly because you want an accountant to generate financial statements. So if you're not making money, you can see where you can cut back. Hobbies do not. Business people document their activities correctly and they track them according to IRS and Canada Revenue Agent standards, which means you must have a tax tracker or tax organizer, and I'm going to get into what that is. Hobbies do not. The important point is this. The government doesn't care if you make money, believe it or not, to subsidize you. All they care about is you're trying to make money. That's the only thing they care about. Now, here's another question. Where does your money go? And I ask that all over the country when I lecture, and it's funny how many people don't know that. Here's a chart that was prepared by one of the larger financial firms. It shows that the average person in North America pays 20% of what they make every paycheck in debt. Now, debt includes all debt, mortgage debt, education loans, car loans, all debt. And I've seen that number much higher, in fact, by the way. This is an average. In addition, there's a day called Taxpayer Freedom Day, which is the day that the average person has to work to pay off their federal, state, and Social Security taxes, or in Canada, federal, provincial, and CPP. You know what day that is? I had one person in one of my seminars say it was December 28th. Well, if you look on the web, it's April 17th. So that means from January to April 17th, divided by 365, the average person in North America pays 33% of what they make in taxes. Well, if 33% goes out in taxes, and it could be a lot more. It could be as high as 53, by the way, depending on your state, depending on your province, depending on your income, and so on. But if the average person pays 33%, and they pay 20% in debt, well, that leaves 47% for everything else. That's why people can't get ahead. That's why only 4% of people at age 65 can retire with the same standard of living, because they can only live on 47%, and that has to cover their retirement, their education for their kids, food, clothing, medical emergencies, all those things. No wonder people can't get ahead. Now, here's another. This is probably one of the more startling things. Who are the biggest tax cheats in North America? The startling answer is this. Business owners themselves cheat themselves out of over $100 billion a year due to lack of knowledge. In fact, a study shows that small business owners overpay their taxes to the tune of about $150 billion. That's with a B, $billion a year. And based on my seminars, my estimate is that well over 95% didn't even know they overpay. You know, I guess ignorance is bliss, but it can be very costly too. Now, why do they overpay? Well, there's two major reasons. The first reason is lack of knowledge. And we're going to get into a number of things that I'll bet you didn't know. And I'm just, you know, touching the surface here. But the second reason is procrastination. You know, it's kind of like an alarm clock. If you don't have an alarm clock to wake you up, you may miss your appointment. Well, the same thing is true. If you don't have a tax organizer or tax tracker that will basically be your alarm clock to trigger you to write down the things you need to write down, what happens? You don't do it. You forget, and then you lose the deductions. Procrastination is a huge killer in deductions. Now, here's some cash drain myths, some of the biggest in North America. One of them is only 7 words long, and yet it causes more people to lose money than any single mistake you can possibly make. And those 7 words are, my accountant takes care of my taxes. I have a similar myth, my spouse takes care of my taxes. If you learn anything, learn this. You know, the accountant is only as good as your documentation and what you know. If you don't have the right documentation, or if you don't do the tax planning by December 31st, there is nothing your accountant can do for you. There really isn't. Now, here's another myth. I gave a big seminar with Donald Trump and General Schwarzkopf. Some of you may have seen me. And I had a gentleman come up to me and said, Mr. Botkin, you know, I loved your program. So one problem. I don't pay taxes. I get a refund every year. He didn't realize he was getting back his own money. And he wasn't even getting it all back. I had several people tell me they don't pay taxes. So what I've done is I decided to do an analysis. Here's an analysis of an individual who makes $50,000 a year. We're not talking about Donald Trump here. Single person making $50,000 a year net of all the deductions. On $50,000, they're paying $12,917 in total taxes. That's federal, state, and Social Security. Their withholding or estimated tax is more. Now, that's usually the case. Why? Because the government wants to make sure they get their money. That's one reason. But secondly, when you get a refund, you feel better, don't you? This person is getting a $1,568 refund, but he's leaving $12,917 with the government that he has to pay in taxes. That's 25.8% of his taxable income is paid in taxes. Somebody who makes $100,000 pays 32.4% of their taxable income in taxes, and somebody who makes $250,000 pays 37.7% of their taxable income in taxes. So this is a huge, huge problem. Now, here's another myth. What's the difference between the benefits and the fringe benefits that you can give yourself as a home-based business versus, say, what a Fortune 500 company can provide their employees, or what a brick-and-mortar company can provide their employees? The answer? None. You get the exact same tax advantages that a Fortune 500 company can give their own employees. In my book, Lower Your Taxes Big Time, I have 130 pages on fringe benefits, and every one of those apply to a home-based business or small business, as well as a big business, every one of them. Now, here's another one. What happens if I only work my business part-time? I have a job, and I'm doing my USANA business part-time. What kind of tax benefits do I get? Answer, you get the exact same tax benefits whether you work part-time or full-time. Here's another myth, and I don't know where this myth came from, but it's a big one. What if I'm not making money yet? Don't I have to have a profit, or don't I have to have a profit 3 out of 5 years? Remember when I said the government was the second biggest bookie in North America? They subsidize you in 2 ways, and here's the way they subsidize you. If your business, if your USANA business generates a loss, that loss can be used against any form of income you have. Interest, dividends, wages, rents, pensions, anything. So let's take an example. Let's say you make $50,000 in a job, and your USANA business generates a $10,000 loss. You only pay taxes on $40,000, the net. Now, here's the second way they subsidize you. Let's say that loss exceeds your whole income for the year. You can carry back all business losses in the U.S. 2 years. In Canada, you get a 3-year carryback. So you actually can carry it back in the U.S. 2 years and get a refund from the federal and state government for the last 2 years of taxes that you pay. You actually get a check. Or you can carry forward all business losses up to 20 years in both the U.S. and Canada and offset the next 20 years of earnings. So you never lose a properly documented business deduction. That's the key here. All the government cares about is you're running your business like a business and not like a hobby, or you don't get these losses. That's the important point. Now, here's another interesting question. Which would you rather have? A $17,000 raise every year for the next 10 years, or if I could somehow magically cut $10,000 in taxes every year for the next 10 years, which would you take? Believe it or not, if you pick the $10,000, you're right. Because by the time you pay federal, state, and Social Security, or for you Canadians, federal, provincial, and CPP on the 17, you're left with less than $10,000, believe it or not. You know, I bet you all heard from your parents that a penny saved is a penny earned. That's a very famous saying, and as famous as that is, it's wrong. A penny saved is the equivalent of about 1.5 to 2 cents earned, depending on your tax bracket. Now, in the next roughly 35 minutes, we're going to show you how to drastically increase your deductions in a few minutes a day, I promise. And I'm going to be giving you, I want to emphasize, a 30,000-foot overview of what's in my books and videos. I'm going to go in very quickly here, so you know, I want to take some notes. Here's the first interesting, shocking thing. How would you like to pay the equivalent of 11 cents a gallon for gas? Would you like that? What are you paying now, $3.50 a gallon, $3.60? Would you like to pay the equivalent of 11 cents or less? Well, when you write up your car, that's effectively what you're getting, and here's why. Let's say there's two ways of writing off a car. One is the actual method, where you take part of your gas, oil, repairs, insurance, wash, wax, depreciation. The other, which is the more conservative way, is the IRS method or the government method. Now, IRS gives you in the United States 56.5 cents a mile, this is this year's rates, for every mile you drive for business. If every time you go to the doctor, every time you go to the dentist, every time you take your kids to the doctor, you should be claiming 24 cents round trip as a medical expense. If you're not doing that, you're overpaying your taxes. If you move to a different city, voluntarily or otherwise, you should be claiming 24 cents a mile. Now, here's something that many Americans miss. The government also gives you 14 cents a mile for charity. I have a friend of mine who's on his choir for his local religious organization. Every time he goes to choir practice, he should be claiming 14 cents a mile round trip. If he wasn't doing it, he was overpaying his taxes. I have another friend who's on he's on an alumni association. He's on as a director there. He should be claiming 14 cents a mile every time he goes to a meeting. I have another, my neighborhood, a lot of moms sell Girl Scout cookies with their daughters. You know, they drive their daughters around, daughters sell the cookies. And they all come to my house because they know I like Samoas. Those moms should be claiming 14 cents a mile. If they're not, they're overpaying their taxes. Now, if there are any Canadians on, you get an equivalent thing. You have a choice between the actual method, or you can take on the first 5,000 business kilometers, 53 cents a kilometer, and anything over 5,000, you get 47 cents a kilometer. Now, why does this translate to 11 cents a gallon or less for gas? Here's why. Let's say you drive 20 miles for business tomorrow. Under the IRS 56.5 cent a mile rate, that's a $11.30 deduction. Now, a deduction is not cash. You have to multiply that by your tax bracket. So let's pick a very conservative tax bracket. Let's pick 30%. And that includes federal, state, and Social Security and Medicare. Okay? So 30% of $11.30 equals $3.39 cash savings. That's what that $11.30 deduction generates in the 30% bracket, a $3.39 cash savings in your pocket. Now, here's my point. If gas costs $3.50 a gallon and you get 20 miles to the gallon, aren't you effectively buying gas for 11 cents? You're paying $3.50. You're getting back $3.39. You're only buying gas for 11. Get it? Now, here's another tip. Last time you go to see your mom, or you go other personal stuff, take your kids to tutoring, going to football games with your kids, and band lessons, and all that other stuff. Normally that's personal. So you ask yourself, with a home-based business, do you have a prospect? Or do you have a potential distributor? Or do you have an opportunity meeting near these personal stops? If so, a substantial part of that trip could be deductible. And by the way, your mom doesn't have to live where you are. They can live in Hawaii and you do it correctly, you gear some appointments there, you can deduct that trip to Hawaii even though you also see your mom. All right, now here's something that a lot of people didn't know. It's a big deal too. The IRS method is in lieu of gas, oil, repairs, insurance, wash, wax, depreciation. And the same thing is true with the Canadian method. But you do get two things in addition to all of that if you use the IRS method, or the actual. You still get two things. The first thing is you can deduct the sales tax on your car to the extent you use your car for business, and you can deduct the interest on car loans to the extent you use your car for business, even if you use the IRS method. Many people didn't know that. So let's say you use the IRS method, but you use your car 80% for business. How do you know that? You have to keep a log, a tax organizer, which I'll get into. Then 80% in that example of the sales tax would be deductible. 80% of the interest would be deductible. If you didn't do this, you can file amended tax returns for up to the last 3 years you've been in business, federal and state returns. I know someone that got over a $6,000 refund from this. This is a big deal, folks. Here's another example. Travel. You ever go away on business travel? When you go away on travel and you're sleeping away, or you're on a convention or a business seminar, not only is your dry cleaning deductible, but as long as the clothing got soiled there, your first dry cleaning bill you incur when you get back home is 100% deductible. And I bet you didn't know that. Okay? But now that you're home, get your dry cleaning done within a day or so of getting home. All right, let's talk about entertainment. Entertainment is, in the U.S. and Canada, is 50% deductible. Now, anyone who's a legitimate prospect. So the question is, who are your prospects? Are your best friends potential prospects in a home-based business? Absolutely. Can they be customers? Sure. Can they be distributors? Sure. How about your next-door neighbor? Sure. How about your adult family member? Sure. So almost everyone is a prospect. So let me ask you a question that I asked a former commissioner of IRS. If almost everyone is a prospect, how can you ever have a non-deductible lunch with someone? You can't. And if you're not writing off almost every meal you have with someone, the only exception is your spouse. But if you're not writing off almost every single meal you have with someone, I would like to suggest that you are overpaying your taxes. And by the way, there's something I want to say about entertainment. You see a lot of commercials on television, and I have a lot of people who say to me, oh, wait a minute, does the government allow me to write off entertainment? Will that trigger an audit? When you watch these commercials on television, I think you'll agree with me that not everybody who watches the commercial is going to buy the product. And the companies know this. Well, you don't do commercials on television. You don't spend money like $1 million a minute on the Super Bowl, for example. But your form of commercial is viral marketing or word-of-mouth advertising. By entertaining, you're spreading the word regarding your business. And you're basically pays to advertise for two reasons. One, you're promoting your business in pursuit of a profit. You're trying to make more money. And two, you're offering proof that you are running your business like a business. So the bottom line is that entertainment is encouraged by the government. You think the government's ever going to disallow entertainment like liquor? It's never going to happen. By the way, liquor qualifies as food, by the way, just so you know that. So you should know this. Entertainment, you can get 50%, and it's fully encouraged. Now, here's something that I bet you didn't know. Associated entertainment. That's what it says in the Internal Revenue Code, actually. I want you to write down the word associated entertainment, and I want you to put an equal sign, and I want you to write down the word fun. Fun. This is where you're going to a movie. This is where you're going to a play. This is where you're going to play golf. This is where you're going to a ballet, and you're deducting that fun, so you're having twice as much fun. You're getting that 20 to 53% rebate when you get that deduction. It's a lot cheaper. In fact, there's an old song that we CPAs sing when we work. You don't want to hear me sing, but the words are great. Everything is cheaper if you get a deduction. Cha-cha-cha. Now, here's the point. And this is not Sandy Botkin talking. This is IRS and Canada Revenue Agency talking. IRS says that you can write off your fun, like your plays and sporting events and movies, if you talk business within the same 24-hour day as the fun. Does that give you enough time? So let's take an example. Let's say I go to Jordan's house and we talk business. And then an hour later, we drive to a football game. Is that talking business within the same 24-hour day as the fun? Yes. Let's say Michael and I have lunch, and we talk business over lunch. And Michael says, Sandy, it's such a beautiful day. What do you say we go play golf? And I said, all right, well, you show me how to play, I'll go with you. I might have a 300 handicap, but I'm going. Is that talking business within the same 24-hour day? Yes. And if you're not writing off much of your fund, you are overpaying your taxes. In fact, if you're not doing a lot of entertaining, you're not promoting your business enough. You're not. I'd like to suggest that. Now, here's the point. Who has the burden of proof of showing that we talk business during the same 24-hour day? Who has the burden of proof of showing how many business miles we have? Does the government or do we? And the answer is we do. And how do we do it? From our tax tracker or tax organizer. You know, I get people asking me all the time, what do I absolutely need to keep the government off my back? Answer, a tax tracker. Everything you write in your tax organizer, they will believe it or not. Unless they can show fraud, they must accept, in regulations say they must accept everything you say in your tax tracker. You know, your tax tracker is your audit insurance against IRS. You all have homeowners insurance. Why do you have that? You probably don't use it that much because if you ever have a hurricane or you have a tornado or a fire, and without it, it's a catastrophe. You probably have car insurance. Why do you pay for car insurance? Because you don't use it all the time, do you? But because you don't have it, you get into an accident, it's a catastrophe. Your tax tracker is your audit insurance. It keeps the government off your back. But unlike homeowners and unlike car insurance, it will pay you every single year. You don't have to worry about being dropped. And it pays very well, too, by the way. Now let's talk about a home office. I will bet you that you heard that a home office isn't worth it, and if you claim a home office, you'll get audited. Did you hear that? Well, I'm going to give you something that's very shocking. Do you know that in 1999, Congress liberalized the home office rules? Now, by doing that, why would Congress do that? Ask yourself a question, unless they wanted you to take a home office deduction. Okay? I'm here to tell you that the home office deduction is incredibly valuable. And if you don't have a home office, especially with a home-based business, you are crazy, because all of you could probably qualify. And let me give you an example of how valuable this is. Let's assume this is my home, or you rent an apartment like this. And we're going to assume that one bedroom is used for business. And we're going to make one more assumption, that that bedroom is approximately 1/8 of the total square feet. In your house, it may be more, it may be less. I'm just picking a number, okay? Now, what does that mean, that 1/8 of the square foot is used for business? Well, 1/8 of all these things then become deductible. 1/8 of the utilities become a write-off. Before they weren't deductible, but now they are. 1/8 of the interest becomes business interest. Now, that's very important for both Canadians and Americans. In Canada, you can't deduct your interest, but by claiming the home office, part of it becomes deductible. In America, we can deduct the interest, but they're all itemized deductions. By claiming a portion as business interest, you can reduce your Social Security and Medicare taxes. And if you're not doing this, you're overpaying your taxes. 1/8 of the property tax becomes a business tax on your Schedule C. 1/8 of the house can be depreciated. And by the way, this could be worth tens of thousands. Depreciation is a big deal. A lot of times people say, well, what happens if I don't own a home? I rent a home. No problem. 1/8 of the rent in this example would be deductible. 1/8 of the maid service, the alarm service, the insurance, the repairs, the snow removal, the lawn care. I mean, we're talking a lot of money here. Now, one question I get a lot of is, Sandy, can I deduct my kid's college education? The answer is no. How about my daughter's wedding? No. How about if I buy a car for my kids? No. Or I pay for room and board or books? No. Despite what I just said, how would you like to be able to deduct the equivalent of every single thing I just said if blessed by the government? Would you like that? You know, there's an old saying in Washington, D.C., where I live, where there's a will, there's a lawyer. And here's the way to do it. All of that stuff, weddings, tuition, room and board, is not deductible. But if you were to hire your children in your business and pay them a reasonable wage for what they do, and they keep timesheets showing what they did, how much, when they worked, what, you know, how many hours they put in, that are reasonable wages that you pay an assistant deductible? And the answer is yes. And if they use that money down the road to pay for their own wedding or to pay for their own college or to pay for their own car or room and board, aren't you in essence getting a deduction for those things? It's the same money, but in one case you went from non-deductible tuition to deductible wages. I mean, a good example of this. And by the way, if children are under 18 and you're a self-employed business, they are exempt from Social Security and federal unemployment tax. No FICA, folks. And even better, the first $6,100 you pay anybody, kids, grandkids, is income tax free. Why? Because they get a standard deduction on their own tax return against wages of $6,100. Result, you get a deduction and they get that money tax free. And you can also claim them as an exemption on your tax return. I mean, if this isn't fantastic, I don't know what is. By the way, you Canadians, you get a higher exempt amount. With your, it's about $10,000 they can earn to income tax free. Now, why is that important? Let me give you an example of what I do in my life. My daughter majored in digital design, which is kind of like web design with some motion. She was a sophomore. I finished her sophomore year, and she was ready to do internships, so she had some pretty good skills at that point. I contacted a big web firm to redesign my website, and I wanted a bunch of bells and whistles, and they gave me a pretty high quote. So I asked my daughter, can you do this with these things? And she said, yeah. So she redesigned my website. She did a great job, by the way. I was able to pay her an amount equal to 2 years of her tuition, which she used to pay her tuition, cover 2 years of room and board, 2 years of books, and she still had money left over. I saved tens of thousands of dollars. My point is, if you didn't know to hire your kids, there's nothing your accountant can do for you. And if you didn't do that, you're overpaying your taxes because you're not doing tax planning. Now, here's a good business owner example. Joe. We're going to assume Joe is in the 33% tax bracket. All right. Joe uses his cell phone 90% for business. He pays $120 a month for the cell phone, so 90% of $120 is $108. Now, that's the deduction, but a deduction is not cash. You have to multiply it by your tax bracket. In the 33% bracket, that's a $35.64 cash savings. He spends $200 a month on rent. If he uses his home 20% for business, that's a $400 deduction. In the 33% bracket, that's $132 cash savings on that $400 deduction. He spends $400 on utilities. He uses his house 20% for business. That's an $80 deduction. In the 33% bracket, that's a $26.40 cash savings. Joe does a lot of entertaining. Well, not a lot, does some. He goes out for meals. He has fun. He spends $200 a month on meals and on entertainment. By the way, I've had people say to me, I spent that on a day. So these are not aggressive numbers. The IRS and Canada Revenue Agency says you can deduct 50% of these $200 of meals and fun. So that gives you a $100 deduction for each. In the 33% bracket, that's $33 each for meals and $33 for fun. And we're going to assume that Joe drives 200 miles a month. That's 7 miles a day, folks. That's not that aggressive. At the 56.5 cent a mile rate, that's a $113 deduction. In the 33% bracket, that's a $37.29 cash savings. Here's my point. These 6 deductions alone are generating $297.33 in cash in your pocket, conservatively, just from the tax system with a home-based business. On an annual basis, this is conservatively $3,568. Will this pay for your auto ship? Not only will this pay for your auto ship, this will pay for a lot of your marketing. And these are just 6 deductions, and I only talked about 1 month alone. This is just the tip of the iceberg. I mean, there are 5 ways to write off the equivalent of your kid's education and weddings. How would you like to write off the 100% of your medical and dental expense as a business expense? No threshold. Would you like that? You can use what is called a self-insured medical reimbursement plan. That's a written plan that allows self-employed people to, and even regular corporation people to do this. You can get this from your lawyer. It's about $700, but it's called a self-insured medical plan. We also cover how to deduct your fun and entertainment, including season tickets. I know someone who wrote off $5,000 of football tickets. One of my favorite things was how to double deduct your business equipment. How would you like to write off all the equipment used in business or in a rental property twice? Seriously. How would you like to turn any vacation into a tax-deductible event? You know, as home-based business owners, you can go anywhere in the world and get customers and distributors, unlike myself, who's a CPA. You can create a retirement plan that beats any government plan, how to save 80% of your capital gains taxes and 40% of your Social Security, and much more. How do you stay compliant? Well, you've got to keep meticulous records, and you've got to learn more about tax deductions. Now, if you don't do that, then you're in trouble, because if you get audited, you're not maximizing your savings, and you can be hit with up to a 75% civil fraud penalty in the United States. Canada, I think it's 50%, plus interest. So you really don't have a choice. And I guess we all have choices, but you know, not having a tax organizer is just a huge, huge mistake. Now, what is a tax organizer and what does it do for you? Well, here's an older version that I used to recommend for years. It's a paper system. The advantage of it is that it had all the tax questions for entertainment, for travel, for automobile, and other things right in front of you, 365 days a year. So you never have to worry about an audit because procrastination, first of all, because it triggers you to write these things down, and by doing it, you will be audit-proof. So, for example, bulletproof. Who? Nick and Carol Hillman. These are real people. What? It was a business meal, or it was a product sample, or a business gift. Where? I went to Palm Restaurant. We then went to the Ford's Theater to have fun. When? The date happened to be on the diary, just didn't show up on the photo. Why? This is the important point. You want to be specific. Don't just say prospect or goodwill. Try to get a referral. Talk about a medical procedure. Talk about a case, whatever. And then in fact, this person even gave me a referral. They gave me the name of Johnson. And finally, how much? $200. Who, what, where, when, why, how much? If you do this, I promise you'll have that peace of mind of never having to worry about an audit again, and you'll be bulletproof from the government, from even the smartest auditor. How will that feel? Now, one big, huge problem is that a lot of receipts are on thermally treated paper. Here is a picture, and this is actually a very good picture, of my receipt. Your eyes aren't out of focus, by the way. This is what the receipt looks like. This receipt is only a year and a half old. If I got audited, I would lose my deduction for this. And a lot of people think credit card statements alone work. Well, think again, because you need more information than the credit card provides. The important point that I want to emphasize to everybody on this line is that in tax law, you are guilty until you prove your innocence. You have to prove all your deductions were business related and that you're following the rules. So how do you do it? You know, I want to emphasize something here. I do not like documenting any more than many of you, but I can do simple and easy. That I can do. And I worked for 6 years to design something that was simple and easy. And it is by far the fastest and easiest way to maximize your tax savings you will ever see. It's called TaxBot. TaxBot is an application. It works on the iPhone, the iPad, the Droid tablet, and the web. The only place it doesn't work on is BlackBerry, actually. It's a fusion of tools and education that will save you literally, and I have some testimonials on this, thousands of dollars a year in under 2 minutes a day, I promise. With TaxBot, you instantly store receipts using your phone by snapping photos of the receipt to answer simple questions that will bulletproof you even against the smartest IRS auditor and Canada Revenue Agent auditor. And how do I know it works? Because both IRS and Canada Revenue Agency have issued rulings that digital documentation like TaxBot is fully compliant. We had a personal discussion in Canada with the rulings director about this too. The way TaxBot works is you have two buttons. That's all it is, 2 buttons. Add trip, add expense. That's it, and that handles everything. So let's say I have a lunch. I press add expense. You're going to get a whole category of expenses. All of these are editable and customizable. So I'm going to have a meal, like a lunch. The minute I press meal, all of these things pop up. So you eliminate procrastination. But what was it? Was the meal? You already put that in. It's already there automatically. Then it will ask you, what was the business purpose? And you put in ask for referrals or talked about a specific product. Then it will ask you, what's the total? How much? You put in the amount. Where? In this example, we went to Chili's. The date automatically appears in TaxBot. Who? What's their name? You type that in, and you are bulletproof. Now, I want you to notice something. Where it says entity, TaxBot works on up to 3 different businesses and 3 different cars simultaneously. So you can use one for you, one for your personal stuff, one for your other business, or one for you, one for your spouse, one for another business. It works on 3 different businesses. It even works on multiple devices. Let's say you have an iPhone and your spouse has a Droid, no problem. That's not a problem here. And you just save it, and everything is saved on the web. Now, oh, by the way, TaxBot also has an integrated camera. See where it says attach receipt? The minute you press that, you see like a lens, camera lens. You focus on the receipt, take a picture, then save it, and it's all saved wirelessly attached to your documentation in the web. So even if you lose your phone, you don't lose the data. Now, here's something else that's interesting with TaxBot. This is what took me so long. TaxBot has a mileage tracker integrated with a GPS system. So let's say you want to start your mileage tracking. You press Start Mileage Tracking. Now, TaxBot will follow you around. The minute you get to your appointment, you click Stop Mileage Tracking, or LAP. If LAP means if you want to do multiple stops, you get the same thing. Here's what happens. The beginning address of where you started TaxBot will automatically appear on TaxBot. The ending address will automatically, where you stopped it, appear on TaxBot. The date will automatically appear. The mileage, unless you're in Canada, then it's kilometers, will automatically appear on TaxBot. It'll even do it as a round trip, unless you want to change that to a single way. All you type in is why. Save it. It will bulletproof you. It will summarize all your business mileage versus total mileage, give you a percentage, show you how much the IRS multiplied the business by the 56.5 cent a mile rate, or the Canadian rate if you're in Canada, so show you how much that would be. I mean, it does all that for you. You can't get easier than this. TaxBot also integrates with a bank or credit card. What you do is you register either a credit card or a bank account, and then what TaxBot does is it scans it every day, and it looks and compares the charges or what you wrote a check for to what's in TaxBot. If it's not there, when you log on to the TaxBot website, which we recommend you do about once every week or two, it will send you a message saying, hey, here are the following expenses that aren't in TaxBot. Do you want to add it? And you can actually add things from your credit card or from your bank just by clicking on a button, and you can add and get a comprehensive report. It's that simple. It will eliminate paperwork and save you, and I mean literally, tons of time. Now, with TaxBot, in addition to the mileage tracker, in addition to the integrated camera and the expense tracker, you get a secure web portal in the cloud. You track it, we store it. The records are stored to bank-level security according to IRS and Canada Revenue Agent standards. You can edit the records, you can download the reports, and never have to worry about losing the information. You know, I do want to mention something. TaxBot is kind of like a BMW. There's more under the hood than it appears. For example, a number of companies will tell you that they store records. TaxBot stores it in several different locations, in several different cities. So your receipts, your expenses, your mileage logs are all stored securely in a dynamic web portal that you have access to 24 hours a day, 7 days a week. It'll even integrate with an appointment, any appointment tool, any credit card, and you can even do a budget with it. Now, here's something that's really important. This was suggested by one of the larger network marketing leaders in the United States. In the front of TaxBot, it shows you in real time how much in deductions you have generated. This is there for several reasons. Number one, it is incredibly motivational. When you see $400, $500, $1,000, $2,000, I mean, it is just unbelievable. It really is. And this example, this generated $15,068 in 8 months for me. I mean, that's just unbelievable. It's almost $2,000 a month. Look at this. And what's even better is that a lot of leaders are putting every one of they're putting everybody in their downline on TaxBot, and they emphasize how much did you get in every call, how much did you put in front of it, how much did you get, because they're finding that when people are using TaxBot, it's reducing attrition by almost 30%. In fact, the average user, this is the average, is generating over $1,000, I think it's $1,060 of deductions every month by using TaxBot. That's each month, by the way. Now, you also get, in addition to all of this, you get me. You get my tax training on demand. So you get over 40 videos, which we're adding all the time on all kinds of topics, not just tax, by the way, financial topics too, including 320 blogs on a wide variety of things. Like I just did a blog on everything you need to know to get an extension on your tax return and the 7 biggest mistakes you make when you do your return. How to get in-state tuition for an out-of-state student, and much, much more. Now, one thing I do want to emphasize, unless you're an accountant or an attorney, you never get tax advice to anyone unless you are an accountant or attorney. So let us do it for you. We will be glad to do that. We have videos and audios that you can use for your customers and clients. So you let us do that for you. Here's some testimonials that, remember I generated on TaxBot. Look at this. These are actual testimonials that I got at one convention. This person, I think I even have their names, Priscilla and Shakir Sutton, generated $7,528 in 3 months. 3 months. What does that come out to be? A little over almost $2,500 a month. Yeah. Wow. This person generated in 6 months $15,122, and this is my favorite, David Hickman. Oh, you can't see it. Oh, it's too bad. I don't know why we can't see it. David generated, I wish you can see it, $42,157 in 5 months. I mean, he was smiling. No wonder this guy was happy. Now, I do want to mention that you never get someone just into your business just for taxes. Nobody goes into business just for taxes. So you want to mention taxes and how good they are and great breaks, but you really want to emphasize your company. That's really the cake. The tax is just the icing. You know, I'm sure you all were very happy thinking you were fine. Ignorance may be bliss, but I got to tell you, it's very, very costly. You have a choice. You really do. You can spend 2 minutes a day, which I hear all the time, complaining about your taxes, or the same 2 minutes a day reducing them. One will cost you aggravation and money, and the other will bring you a lot of cash and bring you peace of mind and give you a huge return on taxes. Now, TaxBot is normally $19.99 a month. However, there's a special discount that was negotiated because of the large number of people that are on. It is only $9.99 a month. It's 50% off. And by the way, that is that's not like a temporary deal. That's what it is, and then it will stay that way. So it's only $9.99 a month. You're not going to beat that. So that's the way TaxBot works. Now, I do want to emphasize that to get it, you want to go to www.bit.com/TaxBotDeal. That's www.bit.com/TaxBotDeal. Hopefully, I have convinced you of the horrible mistake of overpaying your taxes. And let me tell you, to average $1,060 a month for $9.99, of which the government subsidizes this. It's fully tax deductible, so you get that 20 to 53% rebate. So what is that? $580 a month? What's that? 19 cents a day, I think, for $1,060 in deductions on the average. I mean, this is a no-brainer. This really is. And by the way, TaxBot is unconditionally guaranteed. In fact, here's something interesting. You know, when is gambling not gambling? And that's when you can't possibly lose. Remember I told you the government's the second biggest bookie in North America because they're betting on your success? Well, guess who the number one bookie is? Me. And here's why. Have you ever heard of a bookie that offers you a bet that you not only can't lose, but must win 20 times your bet or you get your money back? Yeah, that's 20 to 1 odds. What's that, 2,000% rate of return guaranteed? Here's why. The fact is that TaxBot is so fast, simple, and easy to use, and it's going to enable you to document and securely store any tax-deductible expense in seconds. Enables me to make this incredible bet. Number one, TaxBot must produce $1 a second in tax deductions for every second of use. Number two, TaxBot must track all of your deductions, including auto mileage, in less than 2 minutes a day. And three, it must produce a minimum of 20 times its monthly cost in tax deductions. What's that, 2,000% rate of return? Where do you get a guarantee like that? And here's the guarantee. If in any month you don't feel you've won in any area of this bet, even if you think, oh, this can't be possible, if you don't think you've won in any area of this bet, we will refund your money for that month and cancel your TaxBot service immediately. No questions asked. There is no contract. I mean, this is a no-brainer. You can't lose. And by the way, in addition, if you sign up in the next 24 hours, we will include a free self-insured medical reimbursement plan, which a lawyer will charge you about $800 for. That will be free. You can also download a free home office deduction guide where you see the exact rules and what you need to do. That will come free in addition to all of this if you do this in the next 24 hours. So you want to go to www.bitly.com, it's bitly.com/TaxBotDeal. You know, I want to emphasize TaxBot is like a tax refund insurance policy. It helps make sure you get the full financial benefit of all the great tax laws the government is trying hard to grant you as a business owner. And by the way, TaxBot is now used by billion-dollar corporations, tens of thousands of small business owners, including franchisees, all over the United States and Canada. So they must know something. So join TaxBot team today, and I promise you, we will make your life less taxing forever. So go to www.bitly.com/TaxBotDeal, and if you do it in the next 24 hours, we will also give you all these free items. Okay, I'm going to turn this over to Jordan, and thank you for having me, and I will stay on while you're on. Jordan.
Sandy, thank you very much. Are you there?
I'm here.
Okay, awesome. Sandy, thank you so much. That was awesome information. This is Michael, by the way.
Oh, hi, Michael.
And hello, how's it going? And I'm sure for everybody who's on the line who is listening to your awesome presentation, they're just that much more excited about having a home-based business. But for the people who are not as excited because they're thinking to themselves, well, how do I get my home-based business? We're going to turn it over to Jordan Kemper for a few minutes. He's going to give you guys some awesome options on what to do to take the next step. So I'm not going to say too much more. I'm going to go ahead and bring up Jordan Kemper. Jordan, are you there?
I sure am, buddy. Thank you, Mike.
All right, awesome. Jordan, take it away, bud.
Thank you very much, man. Hey, I want to confirm you guys can see my screen now. Are we good to go here?
No, we can't see your screen. No one has asked me to do that.
Okay, hold on a sec here. 1 second here.
We're still looking at my screen. There we go. That should work.
Got it. We're good. You can see my screen okay now?
We can. I think we can.
Oh, fantastic. Well, friends, what an incredible night. I can't tell you guys how lucky we are to hear from Sandy. I got to tell you guys, I started my business 6 years ago, and when I started my business, one of the first books I read was Lower Your Taxes by Sandy Botkin. Later on, I ended up attending a Tony Robbins event, and I heard his name again. And I just can't thank you enough again for being with us this evening, Sandy. Your information was really powerful, and I took some notes. I don't have any kids. I wish that I did. Goodness gracious, hiring your children is genius. And I got to be honest, I'm one of those guys that said, hey, my accountant does everything for me. So I got to tell you guys, hearing from him as well as many others that have used TaxBot, this is something that we all need to do. For those of you guys that don't know what to do with a home-based business, I want to give just a few tips here as we wrap up tonight's call. When you're choosing a business, there's a couple of things you guys need to look for. Number one is you need to look for a large and expanding market. Vinyl records are going out. Polaroid cameras are going out. I mean, you start to consider businesses. When I was looking at a business, health and wellness was an expanding industry, something that I wanted to look at. Number two is choosing a consumable product. Number three is market products that are unique. Now, let me touch on these 3 points just a little bit more. As you're starting to think about wellness, start thinking about people in your life. I remember just years ago, whether it was people that were looking to lose weight or athletes that I was around that wanted to jump higher, run faster. Maybe it was older people that were looking to avoid disease or to feel younger. Constantly finding people that were looking for health solutions was rather easy. Why a consumable product? Consumable means repeat business, not just a one-time sale, but consistent sales. And then marketing products that are unique. Let's be honest, if you don't have a product that separates yourself in the marketplace, you're going to struggle. So I found this to be true with USANA. In an industry that was terribly unregulated, I found a company that actually did things correctly. They market products that really do work and actually voluntarily subject themselves to the highest standards of manufacturing. USANA does that. Lastly, you want to create a means to leverage yourself. You know, I got to be honest, when I was 22, I did some personal training. I did a little work at an accounting office. My dad was a general contractor, so I swept the room and did drywall and a lot of the stuff that nobody else wants to do. But in every situation, work-wise, I'd always traded time for money, and I'd always worked for somebody else. So what I wanted to do was I wanted to figure out some opportunity whereby I could create leverage. An example would be owning a lawn care business and employing my buddies to cut grass, or maybe founding a gym and employing workers, trainers. But as you start to see a smart business model, business people figure out ways to create leverage. These are 4 simple principles that you want to apply. And the reason I'm an advocate of USANA is because it allows me the opportunity to promote all 4 of those principles. Now, I'll be honest, as I was considering USANA, one of the big issues that I had was I was not a proponent of direct selling. I wasn't quite sure why USANA went the direct selling market or went the direct selling route. Now, you guys see this picture of Robert Kiyosaki and Donald Trump. These are faces that we all recognize. From this book, I want to give you guys a quote. They said, "We found one business model that stood out from the rest. This particular business creates passive income and can be operated on a flexible part-time basis. This business model is called network marketing." I don't have time tonight to go in depth about network marketing. But this book, along with several other books, started to make me believe in the business model that was network marketing. And that was something that took me time to learn. You guys got to hear from Sandy tonight. He says the light is at the end of the tunnel. The light at the end of the tunnel is the financial opportunity that starting your own business offers. Every North American taxpayer who works a full-time job and does not have a side business is probably overpaying taxes to the tune of $3,000 to $9,000 a year. You guys heard it tonight. There are incredible tax benefits that come with a home-based business. But what is the right home-based business? I'll tell you, USANA is an incredible opportunity. I won't be the one to tell you it's the only opportunity because we know that's not true. But as you do your due diligence, you'll start to see why I chose USANA as that vehicle to create income as well as tax savings. So as we leave here, friends, the last step that I always like to give people is an action step. I want to teach people kind of what the next step is. You guys can see there at the very bottom, we've got the code for the TaxBot deal. Please write this down, www.bitly.com/TaxBot deal. Write that down. Take a screenshot of this if you need to. And then for those of you that want to know more information about USANA, I don't have time to cover it tonight. I want you guys to watch a short video. If you go to this web address, it's http://tinyurl.com and then why USANA today. Just type that in, or you can actually go to YouTube and you can type in USANA, Jordan Kemper, the Passport, Health, and Financial Freedom. This 8-minute video will come up and it will summarize why USANA is an excellent choice for you. So again, friends, in review, jot down these 2 codes. Make sure that you guys watch that video. I'll tell you right now, I am convinced tonight that TaxBot is for me. I'm going to get TaxBot. I'm already making USANA work, but I want each of you guys to start seeing tax benefits in your own life, and I want you guys to have a way of being able to track those taxes with TaxBot tonight. And you guys have heard from the best of the best, Sandy Botkin. So as we wrap up the call tonight, I can't thank you guys enough for taking some time with us. Sandy, any closing thoughts that you've got?
Well, I first of all, I want to tell you how happy I am for helping doing this. I do want to emphasize, though, the profit opportunity that you have with USANA is obvious. No question about it. What is not obvious, however, are the great tax benefits that the government provides to fund your business. I think if we work as a team, where with you and using TaxBot, we can greatly increase your chances of success that you want, because we're dedicated to making both you and your distributors' lives a lot less taxing.
Very, very powerful. Well, friends, I always say this. Motivation and education is nothing without application. And I see all too often people see convincing evidence like this and then they sit on it. So your action step, friend, is to write down these 2 websites and to go and do something about it and to start seeing savings in your own life. With that being said, thank you very, very much to Michael Kaihaus tonight. Thank you, Sandy. And thanks to each of you guys for joining us this evening.